In India, all listed businesses are required to make sure that at least 25% of their equity shares are held by non-promoters or the general public under the MPS rule. Now, they can be individuals or financial institutions. Now, the idea of minimum public shareholding was adopted to increase openness in the operations of listed firms. The MPS rule was brought in essentially to reduce promoter domination and ensure that the stocks are widely held. Now, through this, it provides more liquidity in the markets and also helps with corporate governance. In this context, in an effort to facilitate disinvestment, Finance Ministry has said a listed public sector undertaking will continue to be exempt from minimum public shareholding norms for a specified period even after privatization. Now, the exemption to the minimum public shareholding rule was so far available only to government-controlled companies. Now, this change extends to even after the sale of government stakes. Now, the intent of this exemption is to encourage more investors to buy stakes in government companies. The proposal is expected to help with the divestment of IDBI Bank, but it is also expected to help with privatization of other public sector organizations. Now, so far, the government's privatization drive has not taken off as much as expected, as seen on the chart on your screen. Now, the government has a long way to go before it even comes close to meeting the goal set forth in the budget for fiscal year 23. The finance minister reduced the divestment objective for the current fiscal year from rupees 1,75,000 crore to about 65,000 crore. Even this sum, however, has not yet been reached. Yesterday, we spoke about India's PMI for manufacturing, and today the PMI for services was released. In December, India's services sector recovered to a 6-month high. This growth in the service sector follows a record growth in the manufacturing PMI number, which rose to a 13-month high. The Purchasing Managers Index for the service sector, released by credit rating agency S&P Global, improved to 58.5 in December from 56.4 in November. Now, a print above 50 in the survey denotes expansion, while a print below 50 suggests a contraction. Now, the survey noted that more employment was generated and businesses expressed great optimism for the coming year. The PMI for services has been in the expansion zone for 17 consecutive months since August 2021. Now, this marks the longest run of expansion since June 2013. So, what does these news mean for you? With the government reserving the power to exempt them from the minimum public sharing rule, even after a change in ownership, the privatization of public sector units is expected to gain momentum. But the magnitude of the gain will be limited, as there are many other challenges the government should overcome in a divestment process, given the abysmally poor track record up until now. This will have an indirect neutral impact on you. Indian service providers saw an expansion in Indian service activity, which shows the resilience in demand. Notably, service activity has been in the expansion zone for 17 consecutive months. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.